Welcome back. There's a whole lot of merit in buying a home on a loan rather than shelling out the entire capital upfront, even if you do have those savings. Not only do you get tax breaks, your inflation-adjusted returns are always higher when you buy on borrowed capital. But several banks and housing finance companies chase you for your business if you're in the market for a home loan. But what happens once you become a customer? Well, you're old news. You're not treated at par with new borrowers, and that's the injustice we will discuss today on the show with Harshroongta, SEBI registered investment advisor and founder, Harshroongta.com, and Manish Shah, co-founder and CEO of BigDecisions.in. Harsh, your write-up where you call this a personal bugbear, banks charging higher interest to existing home loan consumers while laying a red carpet for new ones. I've faced the same thing, I must say. Why do they really do this?
Well, I mean, let me just call it the girlfriend versus wife syndrome. I mean, once you turn into a wife, I'm sorry, that sounds very sexist, but I mean, you get taken for granted. The key thing is, I think the reason this is happening, I think more seriously, the reason this is happening clearly is because regulations actually encourage this. I mean, the regulator, competition has clearly failed to get a very transparent mechanism for pricing of floating rate loans. The regulator bought in the base rate mechanism with a lot of fanfare, is not implementing it clearly. As per its own regulations, it's not implementing it. They're not ensuring that the base rates are calculated based on a formula that has been decided 3 years ago, or 4 years ago actually. So I think that is not being enforced. The non-tariff barriers, just by simply abolishing prepayment charges, is not going to be good enough, because the banks put up so many procedural issues, and I think that is some part of it was faced by me very, very personally. Right. I mean, you imagine, I've written in the article that the bank refused to accept a letter from me. I think that is really, really amazing. I mean, it is like a small-time really businessman trying to dodge his
I totally on your side, and of course I'm dealing with India's largest housing finance company, and it was a battle to actually get them to reduce rates. Manish, so this is customers like us who are aware and therefore will push a housing finance company or a bank to give us new rates. There are a lot of customers who actually just say, "Arey, 1/4%, 0.5%, who's going to go through the paperwork?" The system, of course, doesn't encourage them, but is it okay to be, comfortable in the fact that you're paying 0.5% more than what the market rates are?
Yeah, and just to take Harsh's point further, I think for the most part, banks do it because they can get away with it. We've seen tons of customers over the last couple of years, exploring this as an opportunity. And most people don't know. Simple example, you can save 80,000 rupees on a 1 crore loan when your interest rates cut down by 1%. So we looked at a user base over a while and noticed that actually it's the equivalent of almost more than a 5% salary hike, which is in the last couple of years maybe higher than your actual hike. You're right. So in most cases, it's just general cluelessness to the extent to which you can benefit.
Actually, both of you are ex-bankers. So it's so interesting to hear that this is happening, and it's happening at a pretty, wide scale. Harsh, is it more rampant amongst banks, or is it more rampant amongst housing finance company? Or do you think that there's no way of actually categorizing or assigning blame in that way?
It is more rampant among whosoever lends home loans.
So it's pretty much the entire universe. So how do you stop it? I mean, as a customer today who's watching the show, what are some of the ways to actually cross the barriers which banks throw up?
I think it is about time we stop asking the customer to do something about it. I think the customer can be conscious and everything like that. But I think now is the time for the regulator to stand up and be counted. Clearly, the industry itself refuses to do self-discipline. competition hasn't brought about the changes that should have been brought about. Very, very clearly, I think this ball is firmly in the regulator's court.
Which
is a very simple thing to enforce, provided, and mind you, when the regulator wants to enforce something, it just sends out those signals and those things get enforced. So very clearly there are subtle signals sent out that this is not one of those things that they are going to enforce. I
Right.
think it's about time that direction is changed. And the signals shouldn't be subtle. I think the signals need to be clear and strong, that you cannot, and I think not to put too fine a word on it, with cheating, the banks are cheating the old customers. Clearly, that should not be allowed to happen, and it is for the regulator to act. I don't think we should now have the consumers being very conscious.
Okay, all right, and consumers aren't. I mean, that's the whole thing. Even by they don't even get to know a communication. I was told by, I'm not going to name anybody because clearly it's a rampant practice, Manish, but when I went to the bank to actually prepay a part of my loan, I realized that there was a large board which said that what the rates of interest were, and I said, but hello, I'm getting almost 0.75% more. Why is that? They said, well, you didn't come to us. And I said, shouldn't you be informing us? No, we have no liability or obligation to inform you. So Manish, you do agree with Harsh that this is really not a ball in the consumer's court, it's literally a regulator issue, which means RBI has to come down hard?
Yeah, I mean, it's hard not to agree with Harsh. I do. And I think and I guess the bigger challenge is, one, as a consumer, your EMI doesn't change. So, for the most part, your tenure gets extended, so it's hard for you to know that others are getting a lower rate, my rate's the same. Sometimes people don't even know when the rates go up, let alone not being passed on the lower rates. Having said which, just as pure mathematics, and perhaps it's probably a difficult one for the regulator to fix, but I mean, think of yourself as the bank or the institution, right? I mean, just the maths of it is so tempting not to pass the benefit on to you. Simple, just high-level mathematics. If I have a 10,000 crore book, if I have to pass on 1% to every customer, so let's say 10% was to become 9%, just as an example, for my entire customer base, you're shaving off 100 crores off my earnings in a year. Now, it's very hard for me to willingly accept that. Now, if the regulator is going to come down on me hard and make me do that, it's still going to be a tough one to swallow. So both sides, right? Customers don't necessarily know. Nothing changes in my life as a consumer. If it's a 20-year loan and the EMIs get extended by 3-4 months, it's not something I may act on right away. So It's a tough one. You can see meaningful stakes in the ground here on both sides.
All right, but final words from you, Manish, in terms of the customer, till the regulator comes down hard on the industry. I think the consumer, the customer also has to be more vigilant, isn't it? I mean, there is a easy way to calculate, and I'm sure he should know what kind of extra shaving from his income is happening to repay that loan or to service his EMI.
Yeah, for sure. And we've seen this. So we see people using our tools. There's more than one way to save, right? One is for lower interest rate to result in an EMI reducing. In fact, the way you save even more money is to actually leave your EMI as it is and pay your loan off faster. Now, one of the things that we've seen with consumers is, and it's a little surprising, with the kind of savings that we chase in areas, for example, e-commerce platforms, just as an example, the amount of money you can save bargain hunting for a cheaper phone compared to the amount of money you're possibly leaving on the table. So not to contradict the discussion that we had earlier in saying, should the regulator come down harder on banks? Perhaps, surely yes. But we see it with consumers. They go back to their banks, ask for a lower rate, they get it. They switch, they make large savings. It just doesn't hurt for all of us as consumers to be more demanding of our...
I think we've got the points across. Anil Dwivedi, I'm going to take this question because look at this gentleman. He's written into us, and the reason I've taken it is this gentleman has taken a home loan of 14 lakhs from ICICI Home Loan Finance. Current rate, he says, of home loan given by ICICI Housing Finance is It's not ICICI Housing Finance, but I mean, I'm sure he means the division. 10.25%. Now, most new customers are getting it at 9.7. I know that. He says, my property is situated at Khambaliya in Gujarat. Provide me this following information: how to reduce EMI, how to reduce loan tenure, why 10.25 interest even if home loan rates have fallen below 10% are being charged to me, and procedure to transfer to loan to another housing finance company which can give me a better home loan rate. So gentlemen, let's just divide. I think it's quite obvious on why this poor fellow with, imagine a 14 lakh loan. I don't even know what to say. Harsh, he's buying in a small little town of Gujarat, and the banks don't even leave customers at that size, isn't it?
And in fact, the key issue is that this gentleman, despite being conscious, is written into you, so he is conscious. He's still going to find it difficult because his size, the place where the property is located. Now that's financial inclusion for you. He's going to have difficulty shifting his loan because there are not too many players active in small. I suspect the place that he comes from is a very small town. So he is going to have difficulty shifting. But I want to tell him very clearly, there are banks in your town, there have to be, who would be offering loans at a cheaper rate. Shift to them. I mean, please be persistent, and definitely you will be able to get the low rate. The pity is that he has to work on it so hard himself. And the regulator is not one, mind you. RBI only regulates 50% of the industry. Absolutely. The other regulator is National Housing Bank, which regulates the housing finance companies. And mind you, it is also the largest lender to the industry. So you have a regulator interested in the bottom line of his finance companies, and not really, definitely, may not be in the consumer service that company offers.
All right, that's another whole big discussion. You know, how can National Housing Bank be a lender and also be a regulator for housing finance companies? And somehow I feel that housing finance companies tend to get away. I might be wrong, but I've actually had a better experience dealing with banks when it comes to home loans than with housing finance companies. I could be wrong. Others might have a different experience, but that's how my experiences have panned out. Gentlemen, thank you very much. A very relevant discussion, and I hope that we can take some of these voices to the authorities or regulators who are, or even banks and housing finance companies, to wake up, and also to the consumer. Thanks very much. All right, we're going to take a quick short break. Many more southern cities to cover, and of course lots of questions. So we do have many more top projects to pick, so don't go anywhere.